Hello everybody, my name is Bayo Adebowale and welcome again to my YouTube channel. If this is your first time of coming onto my channel, you're absolutely welcome, okay? And I want you to please like this video if you find value in it, subscribe to my YouTube channel and turn on your bell notification so you'll be alerted anytime I drop videos. I'm a real estate agent in the Houston, Texas market, and I'm also a real estate investor. So in this video, we are going to be covering 5 steps to buying your first home, okay? 5 steps. Number 1 that we're going to cover today is that you should not sign a long-term lease, okay? Do not sign a long-term lease, because what happens when you sign a long-term lease is that you get complacent, you get relaxed, and you don't follow through on the home buying process, okay? So, but when you sign a short-term lease, say 3 months or 6 months, or you pay month to month, although it might feel a little bit inconvenient because you are going to pay more money, okay, when you sign a short-term lease, but that inconvenience is going to push you out. It's going to help you to not relax, and it's going to push you to start looking for a house that you are going to buy. So that's my first recommendation. You need to sign a short-term lease, not a long-term lease, okay? And number 2 is to actually get educated on the home buying process. A lot of people call me all the time and say, what does it require to buy a home? I've been renting an apartment or a house for the last 5 to 10 years. And I'm always alarmed. I bring out my calculator and we do the math together, okay? You've been paying $2,000 for 10 years times 12. That's a lot of money, okay? You do not want to make your landlord or apartment owner rich. Get educated. You need to start talking to professionals, okay? The number 1 professional you need to talk to is a mortgage broker or a mortgage lender, because they have the most accurate information of what is required from you to get pre-qualified or pre-approved to buy a house. And I will take you through the pre-approval process. Usually when you try to get pre-approved to buy a home, okay, the mortgage lender is going to check your income. If you are a W-2 employee or a 1099 employee, they will want to see your income to know how much you actually make every single month. Number 2, they are going to check your tax returns. Usually they require about 2 years of tax returns, okay? And number 3, they are going to run your credit. They have to run your credit so as to know what debts you actually have and what your credit score is. So if you have a student loan that you currently pay, you have a car payment, you have personal loans or credit card debt, they will see all those things on your credit and they will factor in what your debt to income ratio is going to be. So it's very important they check your credit. Number 4, they will also look at your bank statement, okay, to actually know, do you even have enough money to buy a house, okay? Even if you don't have enough money initially during the pre-qualification process, but at least they will still want to see traces of direct deposit coming in from your job, or just making sure that you even have a bank statement to begin with, because before you close, okay, the underwriter is going to want to see your bank statements as well. So it's very important that they check on the initial stage. So these 4 documents, along with few other documents, maybe your ID, social security card, maybe employment authorization, green card, and other documents like that, they will require from you. But to make it easy for yourself, just call a mortgage broker or a lender in your area and request to speak to them regarding an home buying process and know what it takes. I'll tell you a story. When I was about to buy my first home, it took me 3 years. 3 years before I bought my first home, I started asking questions. I started preparing myself because I did not want to be a renter. It's a waste of money, okay? When you rent, you're actually just making your landlord or your apartment owner rich rather than making yourself rich. So I started asking questions and I knew what I had to do. A lot of things I wanted to buy on credit, I said, no, I'm not buying them. just simply because I knew it was important for me to buy my first home. So I didn't buy a car to put it on the car note. I was driving a car that I purchased for cash for maybe $5,000 rather than me going to the dealership, to buy a brand new car, put it on my credit. Because I knew buying a home was very, very important for me. It was the priority, okay? Life is about choices and priorities. So you want to prioritize your buying process. Get educated early and get educated fast. The number 3 thing I'm going to discuss with you is to speak with a real estate agent. So once you talk to a lender, the next person you want to speak to is a real estate agent. I'm a real estate agent in the Houston, Texas market and surrounding suburbs, including Richmond, Katy, Sugar Land, Cypress, Humboldt, and Pearland, and also of other suburbs. I cover that. You want to speak to a real estate agent because it's important to talk to professionals, okay? Real estate professionals, they are called professionals for a reason, because they've gone to school, they know what is required, okay? Because people often say things like, oh, my sister told me this cannot happen when you're trying to buy a house. My brother told me this, my co-worker. And I always ask them, these people telling you stuff, do they own their own houses yet? Or are they renting? And they'll be like, oh, she's still in an apartment. So how is she finding this information she's sharing with you? You want to be careful. Talk to professionals. Talk to professional mortgage brokers or lenders. Talk to real estate agents. They know. For example, there are down payment assistance program that even some lenders and brokers do not know, or maybe they do not cover those things. I have other lenders that I work with that I know that they can offer down payment assistance programs. So when you talk to a mortgage broker or a lender, they will only offer you what they have at their own company. But as a real estate agent, I have the opportunity to network with a host of other lenders. So I'm not sure where you're watching me from, in any city you are, you want to talk to a real estate agent. They are professionals. They can guide you through the process, tell you what you need that is required for down payment, search for you down payment assistance program that you might be able to qualify for. For example, veterans and those applying with USDA loans, they can qualify for 0% down payment. Not only that, there are other loan programs that offer 0% down payment program. But if you don't follow and talk to professionals, how will you know this? So I encourage you to talk to professionals. So the 4th thing you want to do is to make sure you have the credit required to purchase a home. I always talk to my clients, especially those that have credit challenges. The earlier you know of the challenges you have with your credit, the faster you can start fixing it, okay? Say for example, you plan to buy a house in 2023, which is next year. If you check your credit this year, right, you will know sometimes there are collection accounts on your credit. You don't even know you have them. Sometimes there are some, late payments on your credit report. You don't even know they are there. But when you run your report, I'm going to leave a link in the description for this YouTube channel through annual credit report, where you can get, your credit report from the top 3 credit bureaus, TransUnion, Equifax, and Experian. You can get the credit report for free. And when you get this credit report, you want to take a look at it, okay? You want to take a look at it. You want to see what money are you not owing that is being reported that you are owing, and you want to dispute those items, okay? And you want to see if you can work something out with some creditors that have put things on your credit to see if there's an opportunity for you to negotiate with them and they might take it off of your credit. We call it pay for deletion, and some creditors do that. You pay them and then they delete it. Or sometimes maybe you owe $2,000, they can settle for $500. But you have to identify these creditors based on your credit report and be able to contact them, okay? This is very important. Another thing is, even if you are having trouble contacting the creditors or getting the debt removed from your credit report, which is holding back your credit, you can talk to a credit repair company. Once you know early what you need regarding your credit, then you can go to a credit repair company and ask them for solution. What can they offer you? How can they help you to bring your credit score up? And they are usually trained. If you find the good ones, if you send me a DM through YouTube or you put a comment, I can refer you to a couple of credit repair agencies that I have found to be credible, that have helped a lot of my clients in the past. So the earlier you start preparation, the better it gets, because there are things that you need to work on early. You need to work on them as soon as you notice them, so that when the time comes to purchase a home, there is nothing holding you back. Because the worst thing that can happen, right, is that you find a house that you love, you think you can qualify for it, but then they run your credit and they say, oh no, you owe too much money, or you have too much debt, and there are collections and late payments. You don't want that. So early preparation will save you any headache. The fifth tip I want to share with you is, do not start looking at a home until you do these processes that I've discussed, okay? One of the worst things that can happen is that, you know, a client saw a home with swimming pool, high ceiling, with, you know, 3,000 square feet backyard, and all these beautiful things. Their kids have seen the home, the husband has seen the home, the wife saw the home, but then they cannot qualify. It's heartbreaking. It's heartbreaking, for real. And I've seen it happen to a lot of families where they've looked at the home, they fell in love with the home before they actually got pre-qualified. Don't do that. Don't be that family. Get pre-qualified first. Don't look at homes first. Of course, it's important to identify the areas where you want to live. Maybe the school district is great for your kids. It's close to strip malls, shopping centers. That's awesome. But don't invest too much emotions in looking at the home before you are actually pre-qualified to buy a home. That is the fifth tip I want to share with you. And just a little bonus tip, okay? A little bonus tip. When you are buying your first home, do not go too big. Do not set your expectation too high. And I'll tell you the reason why. You know, you've been renting. Maybe you've been renting a house or an apartment building, and it's been great. When things break, you call up your landlord, they come over there, they fix it up. That's cool, easy breezy, right? But when you own your own home, the responsibility is on you. Your bills will increase. Remember, you have yard to, you know, you have to do your yard every 2 to 3 weeks or every month. You have to pay for repairs, right? And you have to do modification and upgrades to kind of customize the home, because it's a house you are buying. You are buying a house. So you have to customize the house into how you want it, into a home. And expenses come in, right? You have to buy maybe new furniture, new bed. You have to spend money to upgrade the home, to buy new appliances and things like that. The money add up fast. So, and the mortgage payment as well, you want to be careful. The higher the home you bought in price, the more expensive the house is, the higher your monthly mortgage payment is going to be. So if you are shooting to buy a home of maybe $800,000 or $1 million, you have to make sure you have calculated all your finances and your expenses, and you know the cost that you are going to be paying every single month for that home. This is very important, because I've seen people buy homes before and they struggle to make their monthly mortgage payment. I don't want that to be you. And to avoid that is to ask whoever you are working with, whether it's a mortgage broker, lender, or a real estate agent, to actually assist you in calculating how much your monthly mortgage payment is going to be before you actually close on that home. Remember, you have property taxes as well to pay. You have homeowner association dues to pay as well. I'm not sure where you're watching me from, your community. They might also have other dues that we do not currently factor in, okay? Want to make sure that you factor everything in before you sign the dotted line. Once you sign the dotted line, the responsibility is now on you to make sure you pay your mortgage payment, your property taxes, your insurance, homeowner association. Otherwise, they can foreclose on the home. You don't want them to foreclose on your home. You do not want that. So thank you everybody for sticking with me in this video. Once again, if you have not subscribed, please kindly subscribe to my YouTube channel, okay? Like, share, and leave a comment. If there is something that I have said that you want a clarification about, or you just wanted to have a chat with me, leave a comment. I am going to engage with you and we're going to talk about it, okay? If you find the information valuable, I want you to share with your friends, family members, and everyone you know. Welcome to my YouTube channel. I'm so happy to have you. See you next time. Thanks.